when we are talking about the things, these are the learning objectives. Is that we are talking about the overall objective, what is the need and perform the audits, the components of audit risk, how we have to assess the audit risk and audit response. This is the most important thing. And for focusing on the basics, the concept of materiality and performance materiality. When we are talking about concept of materiality and performance materiality, somewhere we use a few ratios what we have done in financial reporting. And fine, okay, that's what it says. And most importantly, the importance of understanding the entity and its environment. Somewhere we will do the analytical procedures, key ratios, concept of fraud, and the responsibilities of internal and external auditors. Fine. We have covered this in brief. We cannot say in totality. The moment we are going to practice the questions, we will come across different aspects, but pattern will be similar. Okay, the pattern will be similar. The purpose is a small revision I am taking. Okay, very quick revision. We have to give a reasonable assurance that is free from material misstatements in accordance with the conceptual framework, only with respect to your financial statements as such. Fine. We should have a professional skepticism. This is why the purpose of revising is you should have a recap of the language what we are doing. Professional skepticism, always we should have a questioning mind as such. Now we have the business risk, but we will not cover business risk that much. Okay, nothing. I can say very few instances we come across anything with respect to. We will focus entirely on the audit risk. Is that what the audit risk says? If we will consider the risk-based approach. If the risk is high, we think that the audit risk is going to have its impact on the audit procedures. Inherent risk, control risk, and deduction risk. If you find difficulty, at least make sure that you will cover this slide. Okay, at least make sure that you will cover this slide. Okay, it will give you a complete understanding about the concept of inherent risk, deduction risk, and the control risk, and what are the different examples. Fine. Now that's what it says. That in detail they have mentioned it. What is the sampling risk and non-sampling risk? Fine. Okay, that's materiality we are working with. Fine. Procedures, substantive procedures, and restricted substantive procedures and substantive procedures. Again, I am saying, is it? This is again, you will have a control, you will have a test of control. Okay, you have test of detail, and you have substantive procedures. Fine. Now fine. Now you can understand from this. We are starting here. Okay. You will have every question will have the first one is they will give about the factors. Before we are doing, make sure that what is the requirements. Okay, make sure that what is the requirement. They are mentioned very clearly. Calculate additional 3 ratios for both the years which would assist the audit senior to plan the audit. 3 ratios, 3 marks. Okay, next. From a review of the above information, ratios calculated. Describe. Describe means you have to put in 2 or 3 sentences. You have to describe. Is it? You have to relate it to that what we have to, what the audit risk which has been identified. No, never ever make a 1 or 2 sentences, and never mix 2 things at one point. See, this is the most critical one. Follow the rules, things will be very, very specific. They are asking you to identify 6 risks and they explain the audit response to each risk in the planning of audit of Walters Limited. Fine. For our understanding, they gave some instructions to us. Is that? Notice that the specific requirements in each part. You need to calculate additional 3 ratios for both the years. Therefore, make sure that you do this and remember the ratios you have already given in the scenario. Second part, you need to describe 6 audit risks and audit response for each case. Students often misinterpret the part of response and instead provide additional explanation. Is that what is the you should not provide an explanation, you respond. Response means what we have to, how we have to act on that audit risk, what action we have to take. Okay, part 2 would be the best answer in the columnary format. So the risk and response should be linked. Go to the scenario line by line, note down the risk areas, use the ratios in 1 to support answer in 2. Remember, do not confuse audit risk and business risk. Yeah, do not get confused with audit risk and business risk. Now, this is the instruction they will. Are you clear about this? Now, when we do the things, is it what they have mentioned? They have mentioned here this. Divide each sentence. Okay, every sentence you will get some information. You are required. You are the audit senior. This is the most important. According to that, we have to act. Okay, of Holby Company and planning the audit of Walters for the year ended 31st December. Next, the company produced printers and has been client of your firm for 2 years. Your audit manager has already had a planning meeting with the director. He has provided you with the following notes. First I will read, then I will give you time. You have to read once on your own. Without voice you can read, but you have to read. Walters management was disappointed with results, so in 2004 undertook a number of strategies to improve the trading results. Strategies positive, fine, no problem. If the strategies are somewhat doubtful, then you have to make your own judgment. This include introduction of generous sales. We can see generous sales related to bonus for the salesmen and high profile advertisement. We cannot have a generous sales. It should be rule based, principle based, the sales plus bonus, because if you are talking about generous sales, you are doing sales to XYZ without credit rating. Is that you have to make the sales to only those people who are being in the listed approved list. Is that you have to do approved list. You have to do sales with respect to based on the credit terms. Is that based on the credit ratings? See, only on one sentence you can build up so many different types of audit risk. Only on one statement. This includes generous means free sales related bonus. See what you are doing now. We are doing a sales. We are having a credit sales. Credit sales, value will increase. Based on the credit sales, they will get bonus. But the risk is you have to get the recovery. That's very important. Doing the sales is not the risk, but credit sales recovery is very important. Now the salespersons will do credit sales. They will show the numbers, but they will get the bonus. But ultimately, at the point of recovery, they will not going to recover. This is the audit risk. This is the way you have to analyze it. Is it right? Now, they have a high profile advertising campaign. You are giving a campaign, yes. The sales is there. People with high profile to attract the customers. In addition, market conditions are difficult for their customers. They have extended the credit period given to them. See the thing. This is another point, main point. How much you see based on the credit terms, based on the credit rating, based on the listed customers, you have to give the sales. Now, because of market conditions are difficult, recovery will be difficult. Is it? In base, what we have done is assume normal credit period will be 90 days. Is that you have extended, even you are extended by minimum 30 days, then 30 days, the credit period will be how much? The credit period will be 120 days. See, who is losing? The client is losing. Is it? Ultimately, what will happen? Now see the repercussions. Okay? Your receivables. Is it right? Your receivables collection period. They say ratios. Is it right? You should know which ratios are linked to which one. Your receivables collection period, what will happen? It will increase or it will decrease?
Will increase.
It will increase. Is that it will increase? Receivables collection period will increase. Is that once receivables collection period will increase, what will happen? It will have impact on your cash. Is that it will have impact on your cash. If it is having impact on your cash, immediately it should trigger in your mind. What will happen? Your liquidity ratios will get affected. Current ratio and quick ratio. Is that current ratio and quick ratio will get affected. Automatically, the moment they say 3 ratios, we got here 3 ratios. Is that receivable? See, when they are giving you that option, there is no hard and fast rule that you have to do this. Whichever ratio we are using, we have to justify that ratio. Automatically, what will happen? Receivables collection period will increase. Your current ratio. Cash will decrease. Is it right? When the cash will decrease, definitely it will have impact on current ratio. It will have impact on your quick ratio. Fine. Now, point 1 and 2. The finance director review inventory valuation and has included additional overheads. Is that when they have included additional overheads, the finance director, you should ask justification for that. That is you are identifying that there is a risk. You will ask justification with the finance on what basis. What is your response? Assume you are going for an audit, you will come across this type of situation. What you will do? That's if you understand this methodology, it will be easy for us. Is it? The finance manager has included. Okay, you can include, but what is the reasons? Are they related to the inventory or they are not related to the inventory? If it is not related to the inventory, why it has been included? That is the audit response. Understand? But that is the audit response. You should ask them and you should mention it very clearly. Okay, and he considered them as it is related to this. He said that it is related to production overhead. The finance director calculated few ratios. The gross profit margin has been increased. Is that gross profit margin? What is the gross profit margin? Gross profit margin is nothing but gross profit divided by sales times 100. Is that gross profit margin is sales divided by 100. Now when the gross profit is increasing, definitely sales are increasing. Is that sales will increase. Again, gross profit is nothing but sales minus cost of sales equal to gross profit. Is that sales minus cost of sales equal to, you should know, yes, gross profit is increasing. Gross profit is increasing, what happened to sales? Sorry, cost of sales. Cost of sales is having any impact. Again, they say that they have added what? They have added production overheads. Is that interpretation? This is what professional skepticism, questioning. We should always be a questioning. See, the moment simply you have to mention, is that simply they want to know whether you know the way of working in the audit. Now, they say that the receivables has been increased. We have said generous sales. It has been increased from 61 to 71. He is happy that the results, he is happy with the two results and feel they are good reflection of improving trading levels. See, sales increases. When the sales is increasing, definitely gross profit will also increase. Is that sales are increasing, gross profit will also increase. But sales are, what are the sales? These are the sales to get the benefit of, for what? To get the benefit of bonus. Actually, the receivables are increasing. It is not a good sign. It will have impact on the cash current ratio, liquidity. Okay, they have mentioned here, see the thing, the revenue 2003 2004, the sales has been increased by almost 5. Okay, the cost of sales, see it is here the difference. I will write the things. Here the difference is how much? 5. Here the difference is how much? It is only 1. Automatically, is it right? The sales is increasing, but the cost of inventory is marginally, proportionately increased. Here we can have justification. What happens here? The thing, the gross profit has been increased by how much? 4. You will have the operating expenses, you have profit before interest and tax. We don't use that here anywhere. Okay, they gave you from financial statement extracts. They are talking about the actuals, they are talking about the draft. We don't worry about that, they have given draft. Whatever the information given, we have to do that. Inventory, how much? Inventory is 2. It has been increased. How much? Difference is 0.5. Okay, receivables are increasing. How much? 1.5. Okay, they see the things. Last year we have good cash. Here we don't have cash. Because inventory period is increasing, definitely we don't have sufficient, we are not recovering it as quickly as possible. Payables also, what's happened? When the inventory, when there is no cash, the payables will also increase. We are delaying the payment. Is that? We are delaying the payment. Is that? Financial statements, automatically what will happen? The payables are increasing. Because of that, we don't have cash, we are supposed to borrow from the bank. We are borrowing from the bank. Now, this is what it says. You have to identify what is the risk and what is the response. Okay, first question we are doing. In the first question, you have to be very clear. Is that the same pattern will work? The same pattern will work. Now what they say, are you clear about this? Again I will revise. Again I will say revise. Is that? See the thing. They have said that there is a generous sales. Is that? There is a generous sales related to bonus. If it is generous sales, fine. But you should not relate it to the bonus. The moment you relate to the bonus, there is a risk related to the sales. Next, they are saying that they have extended what? They have extended the credit period. They extended the credit period. Subsequently, they have added some expenses to the overheads. Additional overheads, okay? They have included which he considered. Fine, if he is considering, fine, ask them what is your response. Your response is you have to ask that, wow, what is the relation, why it has been added. Next is that 1, 2 and 3, okay? Next, what is there? You are talking about the gross profit margin has been increased, receivables has been increased. Is that receivables has been increased, gross profit margin has been increased over a period of time. Then subsequently we can work out on few ratios and we can move ahead. First, they are asking us to calculate 3 ratios. Is it? They are asking us to calculate 3 ratios. They made it very clear. You need to calculate additional 3 ratios for both the years. If you have paper and pen, do it. You write down the things. Otherwise, once class is over, whenever even it is a Ramadan time, whenever there is a time, half an hour, 15 minutes at least, you type this on the laptop, in the Word or Excel, and you send me back. 15 minutes. You do it on a consistent basis. You will not pile up anything at the end of before the examinations. Fine. Now, they will not give any ratio formulas because the reason is already we have done. We assume that you got exemptions, but already we have done in the financial reporting, previous paper F7. Okay, that is the reason they will never give you the formulas. Don't expect that the formulas will be given. Is that for our understanding it is there. Now, operating margin, what is the values are there? Just tell me very fast. Profit divided by revenue into 100. How much is the profit? 4.5 divided by 23. Is it 4.5? 4.5 divided by 23 times 100. How much will get fast? Everyone has to tell one by one. Okay, 2004. 2003 how much? 2003 4 divided by 18 times 100. I think they have given here somewhere. They have given. No, they have not given. Fine. Okay. How much you will get? It is a recap for us also. Understand point? It is a recap for us also. We are doing a revision very fast. How much it comes?
22.2.
Pardon?
No, the other one. 22.2.
First one?
19.5.
19. Okay? Next. What is the second one? Inventory divided by cost of sales times 365. How much is the inventory? There are 2 versions are there. Okay, nothing will happen. Sometimes you will take average inventory. Sometimes you will take average inventory. Sometimes you will take inventory. Okay, both the things will be acceptable. Is that it is? We are not talking about financial reporting. Is that financial reporting will take average inventory. It's up to you. There is no hard and fast rule. Okay, inventory is how much? 2.1, 1.6. Inventory is how much? 2.1, 1.6 divided by how much is the cost of sales? 11 and 10. How much it will come? Fast. Keep calculator with you.
19.09.
15.09.
No, 19. 19.01.
19.01. Good.
1 minute was it is 2.1, yeah?
Yes, 2.1.
19.09.
19.09. Okay, you can next.
And the other one is 16.
Other one is 60.
Sir, it must be into 365, right? Not
Huh?
100. Into 365.
Oh, sorry.
Correct.
Sorry. Thank you, Mugir. Sorry. Now, how much you'll get? 2.1 divided by 11. 11 times 365. You put it as 69 days.
69.68.
69 or 70 days, okay? 69 or 70 days. Divided by 10 times 365. 58 days.
58.
58, yeah.
Okay? Rounding off, not a big issue, okay? Payables is how much? Payables is how much? 1.6, 1.2. 1.6 divided by 11 into 365. 1.2 divided by 10 times 365.
53.
Next. One point two divided by 10.
44.
44. Can I put 44? Okay. Current ratio. Current assets divided by current liabilities. Current assets minus inventory divided by current liabilities. They are saying the additional three ratios. It means we are not going to use the same three ratios. Understand point? Students will do this. They'll say that again, they already they have calculated three ratios. We have to add another three ratios as such. Now, current ratio is how much? Current assets is how much? See the things. Add these three, how much you will get? Two point one, 6.6.
0.9.
Okay, 2, 3, 4, 5, 6, 6.9. Okay, 1.2 and how much is there? 2.5. Is it? 6.9, 6.6. 6.9, 6.9. 6.9, 6.6. 6.6, 6.9. Okay, 6.6 minus 6.9 minus. We'll take that one, okay, 1 minute. Current liabilities are how much? 1.2, 2.5. 1.2, please cross check, okay? 1.2 and 2.5. Inventory is how much? 1.6, 2.1. 1.6, 2.1. 1.6, 2.1. Please check again, okay? Anything from my side. It is how much? It is 2.5. It is to 1.2. Please check again. 6.6 divided by 2.5. It comes to
2.64.
2.64 is to 1. Okay. 6.9 divided by 1.2.
5.75.
5.75 is to 1. That's 6.6 minus 2.1 divided by 2.5. 1.8 is to 1. .9 minus 1.6 is too much, na? Two thousand four, 6.6 divided by current assets divided by current liabilities. 6.9 inventory is 6.9 divided by 1.2. 6.9 divided by 1.2. Fine. Receivables has been increased now. Because of that it's happening. You are put here what's happening. Here that is the reason. What happened? Your receivables has been increased. Is it because why it has been increased? The receivables has been increased because of credit sales. The receivables has been increasing. The current ratio is also increasing. Is it? The current ratio is also increasing. That is one of the reasons. Is it right? Tell me. Yes. Is it okay about this?
Yeah.
Okay. 1, 2, 3, 4 and 5. They have calculated 5. Okay. They have done 5. But keep it in mind. We should not do more than 3. When they say 3, calculate 3. Every suggested answer will be like this. In the suggested answer, they will give you more. But when you are writing, even when you are writing, when practicing, you should stick to 3. They ask 6, don't write 7. Even it is given, don't write 7. Okay, don't write 7. Fine. Now what they say, they are talking in terms of we have identified. Is it right? See, one by one, this is very important. You know the rules, you know the technique, exam will be very, very easy. First, what we have done, the company offered generous sales scheme for salesmen. This is the thing that has been given in the exam question. Okay, this is the first sentence. We are taking it from the scenario. The second sentence we are describing. Understand the point? This is most important thing. People should understand this. Okay, the first sentence, everywhere it is like this. The first sentence, take it from the question. The second sentence, you describe that one. What happens? You are understanding. This increases the risk of revenue misstatement, so that employees aim to maximize the bonus. Simple. Very simple. This is what it says. There are 2 sentences are there. The first sentence, take it from the question. Second sentence, you write from your own. This is the risk. Now, what is the response? You are an auditor. Need to increase testing around the year to ensure cutoff. Is that cutoff means date? Okay, cutoff. When you come across cutoff, immediately it reflects what? It reflects the date. To ensure that revenue has been recorded in the correct period. Don't memorize this, okay? Response. You can give another response also, related one. By practice, we will come across new ideas. Means the auditor need to increase cutoff. See what happens? Generous sales. Maybe when you are doing the things, you are offering. I am just giving you an explanation. This explanation is not required. You are giving a offer. You are giving it offer in the month of December. Is that people are there who will take the offer, with respect to 15th of January also. Slowly you are giving a very advertising you are giving. Yeah, the advertising will have impact. Now you see the thing. The first thing is, make sure that you are going to take only the things that is related to the particular date, 31st December. You have to, this is the response. What is the sales till 31st December and what is the sales after? After sales we are not required. We are taking only for 31st December. This is the first response. Next.
So here can we say there's a risk of revenue overstatement?
Pardon?
Can we say here there is a risk of revenue overstatement?
Yeah,
By
the same thing
entering
they
the-
said now. They have said
The
that
same-
they ensure revenue, they ensure that this increases. This is the description they have made. This increases the risk of revenue misstatement.
So it's mentioned here to ensure revenue has been included in the correct period.
Yes.
There might be another issue. It's a similar issue leading to like revenue overstatement, but by entering wrong figures in the system to overstate the revenue.
You cannot enter wrong figures. Okay, you cannot enter wrong. Errors will be there. Errors will be there. Okay, errors will be. See the thing. You as a client, he can enter the revenue of 5th January to here, but he cannot enter 10,000s as 12,000s.
I mean, the employee of the company, right?
Yes, yes. Employee only. The person who is entering the data, he cannot enter 10,000 to 12,000s. Isn't it? He can enter. There is a scope. There is a possibility that he can enter the January 1st to December 31st. He can enter January. He can either do from this side or he can do from this side to this side. But you cannot see, the things are very simple. When we say it has that error possibility is very, very less. I'm not saying that, I'm not denying that there is no possibility. That possibility is very, very less, that you are entering a wrong number.
Okay.
Okay, next. The cost of sales increased by 10%. Isn't it? See, now we have not done this. Isn't it? We have not done this. Now, what is the cost of sales? How much is the cost of sales? If you take the cost of sales is how much? Cost of sales is 10 and 11. Okay? See the things, how they have calculated. 10 and 11. Okay? Cost of sales is 10 and 11. Now, how much, see, cost of sales, sorry, 1 minute. Is it? Cost of sales is how much? It is 11 and it is 10. How you are going to make sure that it has been increased by 10? Difference is how much? Difference divided by base year into 100. Okay, difference divided by previous year times 100. Difference is how much? 1 divided by 10 into 100. How much it has been increased? It has been increased by 10%. Check, any doubt is there, you ask me. Is it? Now, Sales increased how much? See the thing. We have done this. Is that we have identified this? Is it right? Somewhere where we have, see that sales increased by 5, cost of sales increased by 1. Is it right? This is absolute figures. What we have, same formula we have to use. Difference divided by previous year. 5 divided by, is it right? This is, we are talking about the sales. Okay. 5 divided by 18 times 100. How much you will get? It comes to how much? 27.7 or 28%. Is it there?
Yeah.
Fine. See that this is what it says. See, when the sales is increasing, see, common understanding. When the sales is increasing, definitely the cost of sales should also increases. Proportionately the same percentage. Sales is increasing by 28%. Cost of sales is increasing only by 10%. This gives the rise to the risk that the revenue is overstated and the cost of sales is understated. Understand this sentence and let me know. The revenue is increased how much? Fine, 18%. But cost of sales is increased how much? 10%. Means you cannot say that yes, this happens because of what? We are talking about generous sales. We are talking about generous sales. Some discounts we don't know. They have given discount. They have taken all the things automatically to boost up the sales. Okay, to boost up the sales. What will happen? The revenue is going to be overstated. Is it? The revenue is overstated. The cost of sales is understated. Is it? Now, what we have to do, see, we have to make it sure any discrepancy is there, any differences is there, who is charged with governance, the person who is finance director is the person who is charged with governance. Now you will understand. Is that the charged with governance? We are not writing this, but he is responsible. He is accountable for that. The auditors need to focus on sales and testing. You have to test the sales and expenses. 2 sentences. Keep it in mind. This is the normal standard procedure. I tell to my students, don't write 1 sentence. They should discuss the reason for the increase with in the gross margin. With whom? With the finance director. Again, read. When I am saying read without voice, okay? But you have to read. Slowly. Understand and read. Point number 3. Okay? Point number 3. If it is not completed, you tell stop. I will stop. Don't worry about that.
I have a question regarding point number 2, the procedure followed. So we followed sales testing here, but we can't apply like both of them, details testing and analytical review.
Detail testing and
Analytical review or analytical procedure.
we are doing analytical procedure only now. This is what analytical procedure. The moment you are comparing 2 years. Understand point? We are comparing 2 years. When you are comparing 2 years, when you are comparing for 2 periods, is it right? We are doing analytical procedure only.
We're using both of them, right? Details testing and analytical procedure.
Yes. Test of details and analytical procedures. Okay? The moment, this is a hint I am giving you. The moment they ask you to calculate ratios, it is an analytical procedure.
Okay.
Okay? Now, are you okay? This is the second one. Ask me, stop me, that's very important. The finance includes some additional overheads. Inventory days, how much happen? See, included in some cost to the inventory. Definitely inventory value will increase. Is it right? Inventory value will increase. It will have inventory number of days. We have calculated, I think, suppose, is that we have calculated. How many we have calculated? It has been 58 days last year. Now it is how many days? 69 days. Is that it has been increased by 50. Inventory, see, inventory may be therefore overstated. You have added some other expenses to the inventory. Expenses will decrease, the inventory will increase. Something happens, is it right? When you have added to the inventory, what will happen? Inventory value will increase, whereas the expenses will decrease. Is that inventory value has been increased, the expenses means inventory has been overstated, expenses has been understated. What is the response you are, what you are going to do in that? The inventory policy need to be discussed. The auditor should examine what are the overheads, whether it is related to inventory or not. Included it to confirm whether the inclusion is correct. Detailed cost and NR, net realizable value, is it? Net realizable value, cost or net, lower the cost or net realizable value. This is not there, but this is as per IES 2. These are the methods. Okay, IS 2. Remember, these things we have to be very careful. Detailed cost should be performed, and the aged inventory listing, this is little bit advanced. Okay, where it is something advanced, I will take. Aged inventory listing reviewed. Aged inventory listing is nothing but inventory with the more number of days. Okay, you have inventory with more than 60 days, more than 90 days, aged inventory. Is that we should know why there is a production overheads has been allocated. What is the reason? Is there anything aged inventory? The old inventory is there. If there is any old inventory, definitely is that the production people will use the latest inventory. Is there any procedure is there that we are not writing this, but I am explaining. You will ask whether if they follow LIFO, they follow FIFO, definitely they will, what will happen? There will be some inconsistency will be there. Based on the inventory, based on its nature, based on its characteristics, whether you should follow LIFO or you should follow FIFO. Okay, this we are not writing, this is only for your explanation. Is that what I am saying? You have to discuss with the finance director what is the reason of adding additional overheads, whether it is justifiable, it is correct or not. Second point, detailed cost and NRV should be performed. It is an advanced point. Second point is that means you have to perform. Slowly, the moment we will do second, third, fourth practice questions, you will become perfect in this. Are you clear about point number 3?
So here when you say expenses, you mean the operational expenses or the direct expenses?
No. What are the expenses says? Which expenses they are saying? They are referring to us. They are referring to us something with respect to what? Where is that? Yeah. Additional overheads. These are the expenses. Is it? These are the expenses. Additional overheads. Overheads are expenses. Which expenses we don't know. They simply say it is additional overheads. It is related to inventory. It is not related to inventory. We should know. As an auditor, you should know whether which is related to which one. He considers, is it right? He considers, fine, he is the person who is taking the decision. Okay, he is the person who is taking the decision. When he considered, ask him on what basis we have done, whether it is correct or not. As simple as that. Is it okay?
Yeah.
Next. Point number 4. Gross margin increased from where it has been increased to, whereas operating margin we have calculated. This has been given. Okay, this has been given. This we have calculated. Is right? See the difference. See the difference. The gross margin has been increased. Why gross margin increases? Gross margin increased because sales has been increased. Is it? Gross margin, the reason for gross is sales has been. Whereas the net operating profit margin is comparatively less. There is risk that cost has been misclassified between cost of sales and operating expenses. Is it? Here, what are the things when you are talking about the gross profit? In gross profit, we will have cost of sales. Is it right? In operating profit, we will have operating expenses. Is it? This is the difference. We should know whether there is any miscalculations with respect to gross profit, and there should not be that much difference. Is that the moment there is a difference, there is a suspicion. That is the risk we are going to identify. What you are doing? The auditor should obtain breakdown of the cost. Fine, you ask for the breakdown of cost. What are the things you have included in cost of sales and what are the things you have included in operating? Is there any incorrect allocation? See, incorrect allocation. What I will tell you what happened. They said that it is production overheads. Okay, production overheads. See, production overheads it is related to that. We have to think about if you have a understanding about the cost sheet, you will have direct material, you have direct wages, you have direct wages, you have overheads. Okay, you have direct overheads. Then you will come across prime cost. Is that? Then you will come across work cost. Is that? Then you will come across the total cost. Like that you will have the thing. You should, if you incorrectly using production overheads to inventory, definitely there is a scope that operating one expenses will decrease, another expenses will increase. Is that? Another expenses. This is what they are saying. When we going to get a breakdown, detailed test of details. Is that when you are going to get the test of details, we can come to a conclusion that is there any incorrect allocation between the two. Is it clear?
So what types of expenses we normally allocate to inventory?
Anything related to inventory we will allocate. What types of expenses allocate to inventory means?
Like the raw materials?
Raw materials, work in progress and finished goods. Is it? Raw materials, work in progress and finished goods. See, production overheads are also related to this only. Is right? See, the moment you say material, work in progress and finished goods, you are talking about production overheads only. They are not saying it's a wrong. We are not saying it's a wrong. We are saying that you should know whether they have done it correctly or not. Never say it is wrong. Never say it is it is, sir, see, the finance director has made the judgment. When finance director made the judgment, discuss with the finance director. If the finance director is giving reasons, justification, agree with that. If you are convinced, whatever the finance director says, fine. See, we cannot come to a conclusion without any discussion. That is the point. Is it okay?
Yeah.
Okay. First, we are doing the first question. Just slowly, automatically, you will understand the jargon. Okay. Nothing is now. This is with respect to what? This is we are talking in terms of expenses. In the previous case, what we have done, we have taken into consideration the inventory. See, stage by stage, how they have progressed. You just understand this concept. I will train you in this only. Understand what my purpose is? I will train you in this only. First, they have started with sales. Second, they have done with cost of sales. Third, we have done with respect to, in the cost of sales, you will have inventory, opening inventory plus purchases and closing inventory. They have taken the inventory. Fourth one, they have taken the expenses. Fifth one, they have taken the receivables. And the last one, they are talking about the going concern. First thing, they have taken the sales. Then they have taken cost of sales. Then they have taken what? They have taken the inventory. Inventory is part of this. Is that? Then they have to talk about gross profit and operating profit. Then they are talking in terms of what? They are talking in terms of receivables. Is that? Then they have taken into consideration the going concern. Structurally, they have done this 1, 2, 3, 4, 5, 6. Is that? This is the most important thing in examination. You are sending a message that yes, we understand the process, we understand the flow. Whenever you are doing the audit, you will also follow the procedures. This is the steps you will work it out. Now point number 5. Are you clear about this? Now you are understanding how the thing, we are following this flow everywhere. And I will put this map, every question I will show you the things. Automatically you will be trained in that structure. Receivables has been increased these days. This means that customers are paying longer period to pay. We know this. This gives rise to risk of receivables being overstated if some customers are unable to pay. Receivables has been increased because it means that the customers is paying a longer period time. Because of that, receivables has been overstated. Simple 3 sentences. What is the response? The auditors should carry detail because you are having so many customers with so many sales. Is that on year-end receivables? They have given us why we are doing year-end receivables. They gave us the closing balance. Is that? They are given us the closing balance, including post-year end receipts. Post-year end, is it? Means after date. Is that? That is the reason they say cut off. Is that? Cut off. Post-year end receipts. Next year receipts. Review anything aged receivables. See, the receivables are what? They have said that, see, now you can imagine. They have said that, assume, they have made the decision that the receivables has been 90 days and they have extended it for 120 days. Now, if they have done this, the results will be for this only. Okay? The results will be. Now, if anything is there, the results, anything it is there for previous one. Those previous ones, if anything with respect to previous one, this is going to be called as a aged receivables. This is going to be aged. Now what happened? If you are including the offer, the existing offer with respect to the previous sales, definitely there will be some miscalculations. Unnecessary, what will happen? You are not coming to a correct value. So what we are doing, we want to know whether there is aged receivables ledger, whether any previous receivables has been included or only these receivables are been included. Again I will say, the auditor should carry out detailed procedures year end, and you should monitor what is the post year end and what is the pre-year end. And we should make a conclusion. Are you clear about this? 1, 2, 3, 4, 5 points.
Yeah.
Little bit. I can sense your response, okay? Your voice response I can sense. Slowly, the moment we practice, your response will increase. Everyone's. Okay? Now, as an auditor, see the things. What is the point? We have done this in our previous case, going concern concept. Okay? Going concern concept. Auditor has to give in his audit report that the firm is a going concern. In whichever position it is there, a financial position is good, financial position is not good. In any case, one of the statement is it is a going concern. It is mandatory, compulsory. Now, what happening? You are giving sales, is it right? You are giving generous sales, your receivables are increasing, is it right? Your cash balance, is it right? Cash balance is from positive, it went to negative, you have a overdraft. We don't have cash to support our business, we are borrowing. The client has cash to support the business, they are borrowing. When the borrowing, there will be a question mark that is it going to be survive for the next 12 months. Going concern is only for next 12 months, very precisely. And this is the standard answer you can write in relation to audit risk and audit response. Standard one. Without any doubt, you will get 2 marks straight away. 2 marks. The company has a significant overdraft. Together there is liquidity is becoming bad. Gives rise to the going concern. Gives rise to the simple one. The company has a significant overdraft. Overdraft is there. Liquidity position is becoming worse. It means the auditor should discuss with the company whether the company can continue as a going concern. With whom you have to discuss? You are discuss with the directors, and also do a detailed going concern review, including the forecast and budgets. Including the forecast and budgets. Fine. This is a simple idea about. Now you can understand the audit risk, 2 sentences, audit response, 2 sentences. You follow this much instructions, it will be more easy for us. You should always match it. Columnary form, match it, 2 sentences. What we are saying on the left side, you have to write right side. This is the basic thing. This is the secret of success. Are you clear about this?
Yeah.
Okay. This is the secret of success. Next, we have little bit time. Okay. 10 minutes is there. We will just, we will understand this and will see what. Donald company operates airline business. Entity, understand the entity, environment. The company year end is 31st July. See the thing, your role. These are very, now the next question you will have more, your comfort will increase. Understanding. You are an audit senior. Is it? You are an audit senior. Divide the things. Every sentence divide it. You have started planning the audit. Your manager asked to have a meeting with the client to identify any audit risk so that audit can be completed. From your meeting, you ascertain the following. Okay? This is the introductory paragraph. First, you have to know what are the requirements. They are saying that describe 5 audit risks and explain the audit response to each risk. 5 audit risks, 5 audit responses. Now, previous question, it will be very easy for you. What it says, in order to expand the flight network, you are doing airline business. Okay, keep it in mind, airline business. Immediately, you should camouflage your mind with airline business. Donald will need to acquire more airplanes. They have placed orders for another 6 planes, estimated how much? 20 million, and company is not sure whether these planes will be received within time. Is it? See, you have expanded you have placed the orders 20 million, you are not sure whether it will come and time. With you are not sure, you cannot make any forecast, you cannot make any budgets. In addition, the company spent 15 million refurbishing existing planes. In order to fund the expansion, they have applied for a loan. Okay, they have applied for a loan, 25 million. It has yet to hear from the bank whether the bank has not given any response. No response. It is an audit risk. Is it right? The first audit risk is you have placed the orders, you are not receiving the aircrafts on time. The second is you are committing an expenditure 15 million, you applied for a loan 25 million, again you didn't get a response. That is another audit risk. Okay, the company received bookings from travel agents. Already we have received the book. We don't have airlines, we are airplanes. We have received the bookings via their websites. The travel agents are given 90 days credit to pay Donald come. Is that this is actually another risk? Is it right? You don't have anything planned and you have started taking the bookings. Very risky. Is that tomorrow in future, if you are not getting airlines, if you are not getting loan from the bank, you cannot refurbish your airlines. How can you fulfill this? Sales is a commitment. Is that airline industry? And people will do booking 3 months, 4 months in advance. Okay? And you cannot cancel the bookings at the just before 1 week. Okay? You cannot do. The travel agents are given 90 days credit to pay to donor. It is another risk. Okay? However, due to difficult trading conditions, a number of receivables are struggling to pay. You are not getting, see, you have given how much credit period for them? 90 days. Okay? See the thing. It is very easy. I am telling you this. You have given 90 days credit period. Okay, fine. 90 days credit period to the agents to pay you. Now, what the agents are finding it difficult, struggling to pay to you. Again, what will happen? you are not going to collect it on time. I will make this paper the most easiest paper to you. Trust me. Trust me, I'm not telling, I'm telling it on recording, and I will do that. You should, in the mind you have misconception, it has to go off. Now they say that, see the thing, you think you are an auditor purely, and the receivables they are struggling to pay. You are not getting on time. Neither you are getting, didn't have any response from the bank, nor you have any positive response from your receivables. The company launched a website, and consistently again they have that thing. They have launched the website. They consistently difficulties with customer complaints that the tickets has been put and paid for online, but Donald company has no record of them, and hence they sold the ticket to another customer. They are not sending. See, there is a problem with IT. It is like they don't have a system where you are going to, a same ticket has been sold to two different people. This is another risk, audit risk. What is the audit response you have to do? Donald company used to sell tickets where large call centers located in head office. However, they closed it down and made large workforce redundant. No job, no work. They are selling it to call centers, okay, through the head office. What happens somewhere during the year? It has been closed down. Definitely, see, you should understand. You should come to a conclusion, because they have applied for loan. The loan is not received. They are not getting it from the receivables, are not paying. You are not getting in cash inflow from your receivables. You are not getting cash inflows from your bank. You are not getting your aircrafts. Is right? It is an asset. It generates revenue. Aircraft is not on time. Automatically, what will happen? Your revenue will get hit. You are closing the call centers. The labor force will become redundant. No work. Is it right? Now, if this is the case, based on that, how we have to develop the scenario? Once you read this again, slowly, once it is complete, say it is done. Everyone. Can I move up?
Yeah.
Read. If you are reading now, 60% of the answer will be there with you. Is it done?
Yeah.
Okay. Now, I will explain, and in the next class we will do, okay? In the first, notice the requirement 5 audit risk, and make sure you provide 5 in your answer. You need to describe and you need to explain. One sentence, is it? One sentence for the point and you have to explain it. Assume 1 mark for each risk and 1 mark for response. Go through the scenario line by line, what we did, and put areas, potential risk. This can be done for you in the next 2 slides in color. We have done that. Use a columnary format for your answer with the risk in one column and response to the other. Use the ruler for the table, means you have to put good presentation, that's all. Okay, they are talking about the presentation also. Now, okay, one. What they have done, see that thing. What we have done, they have done the same thing. They have not done anything extra. Okay, additional thing. They are talking in terms of what? They are talking in terms of placing the orders. First point. They are talking in terms of they are refurbishing. Second one. They are taking into consideration the loan factor. Third one. They are asking 5. Okay, we will get more than 5. Is that? They are asking about what? They are saying that they have struggling to pay. There is a receivables. They are struggling to pay. Is it right? Point number 4. Is that the company website? Point number 5. Okay. This is the audit risk. What is the audit response? We have to make sure. Is that they have the complaints for the same. Next, they in May 4 they have reduced it. There is a close down of the things. Is it right? They have closed down of the. They have closed down and now what we are doing, they made how many things? We will discuss this in the next class. 1, 2, 3, 4, 5. They made it very precisely 5 only. Is that they made it very precisely 5 only. Okay. Now time is over because of Ramadan. I cannot do anything. It is almost 5:30. Can we complete this and stop? Yes or no?
Better, sir, next class.
Okay. Now, next class, okay? Okay, fine. That's